Welcome to Stock Informer for you. The noise in the market is loud, but we prefer to let the data do the talking. Wipro investors, what on earth just happened? Today, June 8th, 2026. Wipro absolutely rattled the IT pack, tumbling a massive 8.45% to close at 181 rupees and 60 paise on the NSE. It didn't just fall, it was the single largest loser on the Nifty 50 today, wiped out to its 52-week low. Naturally, panicky messages are flooding in. Is the IT growth story completely dead? Did the Q4 earnings break the company? Or is there a massive, hidden structural reason behind this crash that the mainstream media isn't telling you? In this video, we break down the 4 exact reasons behind today's crash, analyze the real truth of their Q4 results, deep dive into their secret AI transformation playbook, and most importantly, give you a clear action plan on whether you should buy, hold, or sell Wipro tomorrow. Let's get started. Why did Wipro crash today? The 4 triggers. First, let's address the elephant in the room. Why did it crash today? Trigger number 1. And the main culprit is the post-buyback record date exit. Wipro recently announced a massive 15,000 crore rupees share buyback at a premium price of 250 rupees per share, setting last Friday, June 5th, as the record date. Short-term arbitrageurs aggressively accumulated the stock over the past few weeks just to qualify for this 250 rupees payout. Today was the very first trading session after the record date, and these short-term players aggressively dumped their remaining shares en masse, resulting in huge volume pressure of over 7.5 crore shares traded. Trigger number 2, severe macro headwinds. This corporate adjustment coincided with a broader market sell-off. The Nifty fell over 240 points due to escalating geopolitical tensions in West Asia, which sent global markets into a tailspin. Trigger number 3, hot US economic data. Over the weekend, US non-farm payrolls came in hotter than expected. A robust US economy means the Federal Reserve might keep interest rates higher for longer. Higher interest rates mean US enterprise clients tighten their discretionary IT budgets, which directly hurts Indian IT vendors. And finally, trigger number 4, brokerage caution. Global giant Morgan Stanley maintained its underweight rating on Wipro, warning that near-term revenue growth remains heavily clouded. The Q4 reality check, a mixed bag. But to understand Wipro's long-term health, we have to look at their recently released Q4 FY26 earnings. Analysts are calling it a classic mixed bag. Let's look at the hard facts. Gross revenue stood at 24,240 crore rupees, up 2.9% sequentially and 7.7% year-on-year. Net profit showed a strong recovery, surging 12.3% sequentially to 3,501.8 crore rupees, though it dipped slightly by 1.9% on a year-on-year basis. Operationally, Wipro actually showed deep resilience. IT services operating margins held steady at 17.3%, absorbing recent wage hikes beautifully. More impressively, large deal bookings skyrocketed by 65.1% quarter-on-quarter to $1.44 billion. So, if the profits are up sequentially and large deals are booming, why is the market unhappy? The answer lies in their Q1 FY27 revenue guidance. Management stunned the street by forecasting a revenue growth of -2.0% to 0% in constant currency terms for the upcoming quarter. This flat to negative outlook means a true revenue recovery is delayed by at least another 6 months. The AI secret playbook and order book paradox. Now, let's talk about the future. Because under new CEO Srinivalia, Wipro is undergoing a massive quiet restructuring. On April 1st, Wipro officially launched its dedicated AI-native business and platforms unit. They are moving away from traditional manual coding services toward a services as software model, embedding automated AI agents natively into every project. This shift is helping them win massive, multi-year transformational deals, like their blockbuster 8-year strategic deal with Olam Group worth over $1 billion. In fact, Wipro's full-year cumulative order book is sitting at an all-time high of $16.4 billion. But here is the paradox. Why isn't this massive order book translating to immediate revenue? In the recent earnings call, management revealed that contract tenures are elongating and clients are choosing modular execution. Clients are pausing between phases to calculate AI returns before releasing the next round of funding. This creates a revenue recognition lag, meaning Wipro has plenty of long-term business visibility, but near-term revenue remains under pressure. The final verdict: buy, hold, or sell. So, let's cut to the chase. What should you do with Wipro shares tomorrow? It depends entirely on where you stand. Scenario 1. If you held Wipro shares before the June 5th record date, do not panic sell your shares at 181 rupees in the open market. You are legally eligible for the 15,000 crore rupees buyback program at 250 rupees per share. Your best strategy is to hold and tender your shares into the buyback window later this quarter. Especially if you are a retail investor, your entitlement ratio will be higher, allowing you to exit a large chunk of your holding at a massive premium. Scenario 2. If you do not own the shares and are looking for a new entry. For short-term traders, do not catch a falling knife. The technical momentum is sharply bearish. Watch the immediate derivative support at 178 rupees. Wait for the post-buyback selling volume to dry up before entering a swing trade. For long-term value investors, this crash is a gift. Wipro is historically cheap, trading at a highly compressed trailing PE of just 14.4 times with an exceptional dividend yield. While brokerages like Morgan Stanley are cautious, Nomura has a structural target of 250 rupees, betting on their AI pivot. If you have a 1 to 2 year horizon, start accumulating Wipro in small, systematic tranches right here, keeping cash ready if it tests the 172 rupees support zone. What are your thoughts on Wipro's Q4 numbers and today's massive crash? Are you buying the dip or skipping this IT cycle? Drop your thoughts in the comments below. Don't forget to hit that like button, subscribe to Stock Informer for you for more institutional grade market breakdowns, and hit the bell icon so you never miss an update. See you in the next video.